Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in Landon Swan. He's a co-founder at Likefolio. Welcome back to the show, Landon.
Thank you. It's great to be here.
All right, so we're talking Amazon, just off all-time highs. It's had a great run. It seems like everybody's back into believing about this company after it fell about a year and a half ago. It's been straight up since then, just below all-time highs. Do you have the data that's backing this up, Landon?
Yeah, I mean, this stock chart, the one-year stock chart is ridiculous. I mean, it's just a straight line up and to the right. I mean, you zoom out, you see there used to be some trouble, but, you know, for the last year, it's just been unbelievable for investors. So very, very solid. You know, Amazon's kind of made up of three big parts. It's got e-commerce, cloud computing, and digital advertising. And, you know, for the e-commerce bit, I can tell you that, you know, what we're seeing is a slight decline on the web visits on a year-over-year basis. We're seeing, you know, Walmart and Costco pick up a little bit of steam on them on Amazon as people are a little bit more value hunting right now. So that's kind of an interesting play. Cloud computing, we're seeing pretty strong, up slightly on a year-over-year basis, and the ads, I think, is really what's key. You know, they were already plus 27% on a year-over-year basis. They're introducing video to Prime, which, you know, if Netflix tells us anything, that's gonna move the needle pretty well. They're also trying to hone in on their efficiency, operating efficiency, and obviously that's, you know, anytime you can cut costs, you're going to increase that bottom line. But overall, you know, I think that Amazon is obviously doing very well. It's going to come down to a question of value and where you're going to get the most bang for your investor buck, because, you know, you zoom out to that 3-year chart on Amazon, you see we're getting kind of up around near the tops or near the previous tops. So investors got to keep in mind that just because it's been going up for a year doesn't mean it's going to continue to go up for a year. But you know, I have been an advocate of buy high and sell higher. So there's both sides of the coin there. But yeah, overall, the data looks pretty good for Amazon. I mean, obviously, they're the market leader in e-commerce. Slightly off a little bit, though. And then when you look at, you know, just where that's coming from, you know, some of the competition that we're talking about, I think that like I said, they're picking up a little bit of steam on Amazon. Consumers are getting pinched just a little bit. But overall, positive on Amazon long-term, buying dips as usual, just being a little bit more cautious where the stock is now, just because it's gone on such a run that as those expectations continue to climb up, they've just got a higher bar to meet. But so far, they've been able to continue to meet those.
Yeah, they got a cool kind of mix, too. Their AWS, like cloud computing stuff, Landon's going to be longer-term contracts, a little bit more stable. We know it's been a bigger driver to earnings growth. But in the commerce side and the retail arm, I know you have this comparison of mentions between Costco, Walmart, Target, as well as Amazon Prime. Like, I'm not a huge consumer in terms of how much things I buy, but I shop at all four of these places. It's definitely not winner take all by any stretch. And I'd have to imagine if we were talking just total mentions, Amazon's got to be the biggest of this bunch by a wide margin, right?
Yeah, I mean, they're huge. So, you know, it is always, you know, it's harder to grow your percentage when your denominator is so big, right? Mm-hmm. Obviously. So, yeah, but, you know, Costco and Walmart aren't small either. So even though Amazon's very large, they're not small, nor is Target. But it's just interesting to see that the little bit of shift here. I mean, Amazon's doing well, obviously, you know, plus 19% year over year, even though the web's a little bit down. But people talking about Amazon Prime up significantly. But I would not have guessed before we pulled this research that Costco was doing so much better. But, you know, we looked into a lot of these mentions, and people are really looking to save money. I think that's why Walmart makes sense as well. So, you know, this is a tougher time for consumers. And even though Amazon has a lot of great pricing, you know, they're competing with two other big price guys, Costco and Walmart. So pretty interesting to see that dynamic play out. And, you know, on the other end, we're talking about AWS. You know, we don't have perfect information about AWS. I can tell you our Likefolio AWS bill is very high. But when it comes to AWS, we're seeing Google actually pick up a little bit on AWS. They're doing well. Microsoft's not doing as well versus AWS, but Google is. So Amazon's kind of holding their own a little bit, but Google's definitely making a little bit of a comeback and trying to challenge the leader here.
Landon, I noticed the web visits, the 30-day moving average, you've seen that fall a little bit in Amazon. Maybe that's more on the retail side than the AWS side, but
Is this like more cyclical than anything else? The holidays are over. Maybe people aren't buying as much or getting stretched, inflation. Because it seems like the last couple of quarters, Amazon's really turned the corner as far as margins go on the retail side. They're usually razor thin, but those have actually started to expand a little bit.
Right, exactly. No, you're right. It is definitely cyclical. And you know, when you show that line chart, I mean, we're back down to kind of where we were last year, off 4 percentage points, even though it's way off from the highs, which is right around the holidays, of course. So it is cyclical, but you know, it's just interesting that even after such a large peak in that holiday season, you know, you didn't expect them to hold those levels, but maybe to hold some of the fall levels, you know, and to get it back down to just at or under where we were in April of 23 is a little disappointing for a company that's just continuing to grow and grow. So, you know, we're not seeing the complete dominance. We thought that would be a little bit stickier as far as web visits goes. So we're not seeing complete dominance out of them, even though they did have a great holiday quarter last time.
Landon, real quick here, the others that we're comparing to obviously are a little bit more focused, right? Target, Walmart, Costco, they're retailers. They're big box retailers. They got e-commerce, but for the most part, they sell things. That's what they do. Amazon, with having cloud also, is just so different that it has like these almost both of these could be their own mega cap tech firms or mega cap retail firms. When you're looking at this from a potential investment or trade standpoint, with the data that you're seeing, do you like that it has both things, or would you rather be more focused right now and choose the trends that are working?
I tell you what, that's a tough question. You know, my gut is that I like the diversification because Amazon is really good at efficiency and in increasing that bottom line with, you know, obviously increasing the top line, but by increasing the bottom line by reducing expenses. I mean, that's where the birth of AWS was. They wanted to stop paying that bill, so they made their own business. And so as they continue to do things like that, I like that they have these synergies, that they are separate businesses, but they do work together in some ways. And when they start getting more and more investment into things like AI and operational efficiency, it's going to hit both of those, and they're going to be able to feed off of each other. And you're going to have the ability to have exposure to, you know, the consumer retail sector and the business, the commercial side. So I think it's a little bit of a safer play, but it's also got that explosive growth potential because they can play off of each other and continue to increase that efficiency. So, you know, my gut says both, but, you know, I can see merits of a more focused company, but Amazon is so good at becoming efficient, and with technology advancing as quickly as it is right now, I think they're really going to leverage that and increase their margins significantly, especially on the tech side.
Yeah, on the tech side, they disrupt, they invest, then they've won historically on that. And we didn't even mention advertising. That's 9% of their sales now. That grew at the highest rate, 27% year over year last quarter. All right, great stuff, great data as always, Landon. Appreciate it.
Thanks, guys. Happy Monday.
You too. That's Landon Swan, co-founder of Likefolio, joining us, breaking down Amazon. Andy Jassy just came out with a note